So we're going to be talking about how to bring 1 billion people on chain. Story people have been talking about for a long, long time in this industry. Hasn't happened yet. Santi, I want you to talk about what you are building that supposedly is going to solve this problem.
Yeah, so the idea for Inversion is, since I've been investing in crypto in 2012, I've obsessed about this idea, which is how do you bring 1 billion users on chain? And look, we built incredible tech over the last 12 years. You guys have funded a lot of it. I funded a lot of it. And I just grew tired of everyone in crypto is trying to export this technology and build distribution. The problem with transformational tech is that it takes a lot of time to convince people. Like the internet took 20, 30 years, right? Yeah. But the thesis for Inversion is very simple, which is we're at a point where this technology works. We have enough proof points that we can support billions of users. I believe it. And instead of trying to convince normal businesses to adopt crypto, and I call it crypto-enabled businesses, not crypto-native in their own right, can be hugely transformational to cut down costs. So at Inversion, it's a private equity approach. We want to go and buy traditional businesses where we think that we can meaningfully cut costs and really prove to the world something that hasn't been done before, which is you take a traditional business and you really optimize it. And you might be hearing from a bunch of people that says, we've talked about crypto being the sentiment layer of the internet and super transformational. No one will believe us until someone does it. And so I'm very motivated to do that, and that's where we're, hopefully in a year's time when we're sitting down here, we can deliver on that.
Okay, so you describe the approach as you're building the Berkshire Hathaway of crypto. You're going to acquire traditional businesses and shove crypto inside of them in order to make them more efficient.
Yeah.
Okay, paint the picture for me. What kind of businesses are we talking about?
Yeah, so over the last 4 years, I've evaluated hundreds of different types of businesses, which is equally valuable to know what we are not going to buy today. But let's talk about a mobile carrier, asset-light mobile carrier. Doesn't own any of the infrastructure, but needs to go buy data from someone else. It's a business that has a lot of high fixed costs, and you're working with really antiquated technology and monopoly kind of markets where you're beholden to people that have deployed cellular towers. But you look at something like Helium, which is a deepened network that allows carriers to offload, meaning use wireless technology to achieve lower data costs. Data is 50, 60% of the cost structure of a mobile carrier. So we think that we're very motivated to buy a mobile carrier. We buy it at the right price because it's 3.5, 4 times EBITDA. We can get access to a large user base. We live with that user 24/7. You want to understand how to onboard 1 billion users to stablecoins? It's with a mobile. It's through mobile, and it's by becoming, the mobile is simply a Trojan horse into becoming their bank, which is the way to activate users to stablecoins is to incentivize them to on-ramp, to receive remittance flows. And the interesting thing is when we go out and talk about this, it seems abstract, but go talk to a telco executive, he'll validate the offloading piece I just talked about. Go talk to Nubank, which is one of the largest fintechs in Latin America, 100 million users. They're already doing this. And so I think it pays, as an investor, you probably know this better than anyone, is it pays to pay attention. So Nubank's a publicly traded company. They started as a fintech, launched their own MVNO mobile carrier, and then they rolled out USDC. Well, guess what? USDC is the #1 asset that their users are buying. It's not Bitcoin. It's not Solana or meme coins. It's USDC. Why? Because everyone in the world still wants to hold dollars, and they can't do it. They can't do it through traditional banking channels. And so, again, when a lot of people talk about how to onboard 1 billion users, and a skeptic in Silicon Valley, rightfully so, might say, listen, guys, if the product is that good, if you're telling me that stablecoins are room temperature semiconductors, as a Collison brother calls them, it's like, why haven't there been more users using it?
So, I mean, this has always been, I've heard this story replayed and remixed many times in crypto as an investor. I'm sure you have too. I remember back in the day, there was a story about, first there was Kick with their token Kin.
Yeah.
Then there came MobileCoin, which was supposed to be on Signal. Of course, Facebook did Libra, which never really saw the light of day. We've had the story many times. They're like, okay, this is the real-world story of normal people, particularly in emerging markets, that are going to use stablecoins, are going to use crypto, and it's never quite happened. So what's the why now? Give me the why now.
I don't think anyone's adopted this model. Again, I go back to this premise. I never want to build distribution. I want to buy it at the best price possible. It's a classical inverting sense, which is, building distribution is expensive, time-consuming. So most of the times, most startups will run out of money before they acquire customers. And so as an investor, you look at the unit economics of most of these crypto companies, crypto-native companies, is really high. You're throwing crazy amount of airdrops to convince people to use your product. More so, the only venue that they can come through is an exchange, so it's purely speculative. When people go to Las Vegas or Macau, they're not thinking about buying a mobile plan or putting their life savings to work and earning yield. And so it's very unrealistic. The CAC, the customer acquisition cost, is really high. So why hasn't it worked before? There's a myriad of reasons, company-specific, regulatory environment. But by and large, no one has actually taken this private equity approach, which is buying a company that is not crypto and turning it into crypto-enabled. I guess the analogy I'd make is that there's this great private equity fund called Silvergate. They did this in the internet. They came to basically the same fundamental realization, which is the internet's going to be huge. Every business will use the internet. And so they made a ton of money, have made, for their investors by what they call internet-enabled businesses, which is the core business doesn't change. Certain elements of that business do change on the back end. Again, our North Star is to make crypto invisible. I never want to sell the user on crypto. I'm not selling a deepened back mobile carrier. It's a carrier. There's no disruption of the service. The customer never sees the crypto backend infrastructure. They don't care. In a similar manner, when we become their bank, I'm not selling them a stablecoin. I'm selling them a bank account, a US dollar denominated bank account that can earn them some yield. These are two core services. And I think there's a whole host of things that go on the back end of how do we really abstract the user experience, but by and large, crypto needs to be invisible. Like, I think as an investor, you know this really well, which is you never want to assume you're going to change consumer behavior. People don't know how to manage their finances. Stablecoins are phenomenal products, 0 to 1 truly, because they're fast, they're global, instantly settled, and programmable. So the programmable is great because most people don't know how to sweep their savings account and put it in treasuries and earn yield. Stablecoins do that for you automatically. And that's when you deliver a very valuable service to the user, improves retention, increases revenue, monetization, LTV to CAC, unit economics, all this stuff. We're not in the business of throwing crazy incentives like every other crypto project. We're here to make money.
Okay, so let's say I buy the story that you're the Berkshire Hathaway or the Silvergate, obviously no connection to the bank, of crypto, and you're going to bring crypto to these traditional businesses the way that once upon a time people brought the internet to traditional businesses. So first and foremost question is, okay, how are you going to go about doing this? You've been very publicly supporter of Solana, but you're not building this on Solana.
Nope.
You're not building this on any other scalable chain. You decided to build using an Avalanche layer 1.
Right.
Why? Why build a new chain and not just adopt what's already there?
Why wouldn't I?
You tell me.
Again, in the classical inverting sense, it's like if we're going to go and do all this work and do the transformation at the business level, and I'm going to bring all of that activity, economic activity on chain, why would I leak that value to another chain? It doesn't make sense. The tech is very much commoditized. It's open source, it's out of the box. Avalanche has some interesting features that we don't have to get into, but the most important one is, look, it's EVM compatible. But having sovereign block space is not a meme. It's very real. I don't want to be paying for block space more than I need to. And having noisy block space and activity and paying more so for that, I think, is just a leakage. The other one is, how much value do you think sits on treasuries of these foundations? L1s, L2s, Solana, Arbitrum, Ethereum. Billions and billions of dollars. Candidly, I went to them and said, why don't we fix crypto's biggest problem, which is we need to break away from the self-referential aspect that we have in this industry, which is it's all speculation. We have great products. We need to go and buy traditional businesses and bring them on chain. Those users fundamentally will use stablecoins, but we can't assume they're going to come through an exchange. They just don't have the competence. So it was really twofold, which is I can only dream to be in a position like some of these foundations where they have 20, 30 billion. I mean, it's just. You know this as well. What did AOL do at the peak of the dot-com bubble?
Why Time Warner?
They bought a business 7 times their size, a real business called Time Warner, to grow into the valuation. Could we justify the valuations of these L1s, L2s? I think it's predicated on this rosy picture that we're going to onboard billions and billions of users. Well, guess what? How many active users do we have on chain today? 30 to 60 million, based on however you want to slice it. We got to do some work, and we don't have 12 years.
Okay. So you're going to actually bring those users on chain.
Right.
You're gonna play back the AOL Time Warner move. So my question for you is, okay, it's a big, very ambitious vision. How are you going to finance that? Where's the money going to come from? Are you going to buy these businesses with tokens?
Initially, no. Like we can't, contrary to what the industry believes, is we can't manufacture value out of thin air. But markets can be irrational. So we have really good investors, not just crypto native. Like there's, private equity as an asset class is massive. And the interesting thing now is that we're getting a lot of reception from people that say, hey, I believe in this crypto thing. I believe in the blockchain, not crypto folks. And they say, we want to learn how to use crypto in our portfolio to drive operational efficiencies. And so they see Inversion as that way to express that thesis to learn. So we'll initially buy a decently large business. We're looking at a number in Latin America, which is our first region of focus. We'll buy business, think of it as like a SPAC, an SPV of sorts. And then we'll bring and anchor that business to the Inversion chain. And once we do that, the hope is that we'll do things that have never been done in crypto that we've really pressure tested, which is we'll bring a user to our chain that has never existed. It's a user that doesn't care if Bitcoin's at 100K or 20K. Why? Because he doesn't even realize that crypto's on the back end. But there is very real economic activity being settled on the chain. And there's MEV, and there's other type of activity. And so I think, look, the narrative recently has been, do we need more infra? Do we need another chain? And the answer here is very much so. Because no one's focused on bringing a user that, again, is not here for speculation. The percentage of fees that are derived from speculation in any other chain are 2/3 or the bulk majority of it. For me, a KPI is, one, crypto's invisible. It's real economic activity, core services. We're talking about mobile. We're talking about banking. And it's bringing a user that is very unsuspecting. It's sort of like, they're using a core service of a business that we've bought, so the retention is much higher. I think Rob, one of your partners, did a phenomenal analysis when Trump launched the meme coin that Friday night. Solana, very impressively so, is able to handle a ton of volume, 20-30% of all NASDAQ volume. For anyone out there that's still skeptical that we can't bring 1 billion users on chain, you're very wrong. Meme coins are proving that. But here's where it breaks down: is the retention is non-existent. Why? Because will continue to be very volatile prices for crypto assets, and that's a very traumatic experience for users. So yes, we do need a chain that is very much focused on taking traditional businesses and transforming them with this strategy of crypto-enabled features.
Yeah, I mean, to your point, if right now most of crypto is monetizing off of being a casino, yeah, somebody who comes in and blows all their money on blackjack is not going to retain because they lost all their money. Yeah. The idea of having these more these sort of normal everyday users who are getting some of their core services on chain, these users are going to have a very different retention profile. They're also going to want very different things, right? So they're not going to want to do recursively leveraged staking or all this other stuff. So what other things are you going to? How are you going to monetize these users once they're on chain who want totally different set of products than what crypto offers?
Well, I would push back a little bit on that, which is I think there's a place in this world for digital collectibles. I think NFTs prices have come down, but it's a very powerful value proposition. Having digital scarce items will be very real. I think gaming is very real. There's some experiments that have been discounted because prices go down, but that doesn't mean that it won't work. The problem that we've had as an industry is that we've built for a very limited user base. And most companies have built really good products. I've invested in 300 startups since I left Parify. They're really good. The highest reason why these companies fail is because there's no users. Most of the users that are on chain are not your core user. They're not your gamer, right? It's a user that is speculating on an airdrop. And so it's very hard to build for the current user base. So again, how do we monetize? You can think of it as it's a permissionless chain like no other. but it's very much the Apple model, which is a very curated experience for our user because I want to deliver extreme value to the consumer. And in a very curated manner, which is, again, it starts and ends with mobile, which is a very walled garden of apps that we feel that the user will benefit from. But it starts with mobile. It starts with banking. Now, why mobile? Just going back to that for a minute. Not only can you buy business at a really interesting price with terrible margins and high fixed structures that you can really optimize with crypto rails, but also you have immense amount of data on that user that is topping up and prepaying data, right? You want to do credit in places that don't have social security systems, you do it like that. There's a reason why Nubank got to 100 million users. They were giving out Brazilian users $1 credit lines and credit cards. So again, I love this business because you have also, if you have a SIM, you've had the KYC. You want to be compliant with regulators. You want to do anti-money laundering, fraud detection. You basically have identity profiles on all these users. You can extend credit. You can extend other products. And it's no different than Tencent. I draw inspiration. You mentioned Berkshire Hathaway, obviously instrumental in why it's a chain, because I want to build a vehicle that I never have to sell these businesses. I want to continuously buy more and more of these businesses and onboard more users, right? Success for us is, one, prove to the world that crypto is vastly more interesting technology to optimize costs in the same way that AI will be able to deliver efficiencies, but more so to become the largest bank and mobile carrier in the world. That's what we're going after. It's the two largest, I think, markets, one of the two largest markets in the world. Everything is going to come on chain. You either believe it or you don't. I'm not here to try to convince you by pontificating in this panel. Hopefully, when we're here next year, we would have bought the first business and proved to, the telco executives and the analysts at JP Morgan that are covering telecom, and we said, yeah, guys, we took a business with 8% EBITDA margin, and the entire industry is sub 10% EBITDA margin, and we took it to 20. And they're all going to be sitting there and saying, wait a minute, what have you just done? Surely it must have been AI. And you're like, no, it was one thing. We deployed hotspots, and we offloaded, and we doubled margins. Oh, by the way, we then increased that by becoming their bank. And it sounds like very abstract, and I appreciate that. Not everyone believes it. But I'll tell you, in this journey, what's been most interesting is, I obsess about downside and all the risks. I've really pressure tested the thesis of, can we actually cut down costs? Are these hotspots that Helium uses, can they be deployed in a place like Mexico or Brazil? Is there reliability there? Because you never want to disrupt the mobile experience for users. What's the conversion rate on stablecoins? Well, let's look at Nubank. Let's look at telcos that already do offloading in a private context. So I think it's, I've had this view that incredible infra has been built. I think stitching together certain elements is where a lot of value will be created. And, transformational technology, I'm not here to design beautiful products that the consumer never thinks he wants, like an iPad or a smartphone. I think it sounds a simple strategy. I don't mean to oversimplify it, but I do think that we have enough proof points in the industry to suggest that the timing is correct, and the implementation, of course, is where this will either work or not work. But I'm very motivated because I'm tired of just trying to tell people that this can work. I just want to do it and want to solve the problem that you probably have too, which is you go to your dinner and non-crypto people and they're like, oh, right, here comes the crypto guy. Yeah. We got to make this technology relatable. And this, I think, is the best way to do it.
Look, I think the problem you're trying to solve is very core at the heart of crypto, which is how do you actually put this into more people's hands? I think what you're doing is very ambitious. Obviously, it's very risky, but it's incredibly heartening to see somebody who came from the investing side and decided, you know what, fuck it. This is such a big, just painful problem that I want to go solve it, and I have all the respect in the world for you for doing that. So we're at time. We got to wrap, but thank you for presenting what you're working on. It's very exciting.
Thanks, Steve. Appreciate it.